Fox Business News attempts to create an air of Wall Street propriety and significance, but in reality, either they're very confused about the real estate market, or they're purposely trying to confuse you. We're looking and see which it is in a little bit. I'm Bill Gross. This is my weekly real estate market update. Now, before we get into Fox Business News, let's get into the market and the numbers on where we're at right now, and then from there we can make a good decision as to what they're trying to do. Take a look. As I maintain, there's two main factors in the real estate market. In any economy, there's always demand and supply. Demand would be buyers, supply would be inventory. And when buyers and sellers get together, that determines the price. More buyers, higher price, more demand, more supply, lower price. Those two offset each other. On the buyer side, the main demand in real estate is indicated by the interest rates and driven by interest rates. And take a look at what's happened here in the last week. We can see the interest rates have been almost all year between 6 and 7%. They had inched above 7 slightly last week and stayed there all week, looking like it would break forward. And guess what? Boom, came back down, closing the week at 6.89%. I don't think there's a big difference between 7.1 and 6.8. It's just that it's not continuing to increase. It's staying in that bandwidth between 6 and 7. And at this market, I can tell you, there's a lot of buyer interest. Every listing I have has agents calling me and buyers calling me. So at these interest rates, there's still great demand to buy houses throughout the United States overall. Now, on the supply side would be inventory. And inventory not only continues to be record low, it's finally dipped below the all-time record, not just the pandemic period record. That was already half of the normal market record. So here we are in America with more people than ever because the population increases, and our inventory is just over 400,000, is about half of what the record would have been pre-pandemic, and is lower than all three of the pandemic years. So very few homes for sale. It's impossible to have a housing market crash without too many homes for sale. The process is homes drop in price, sellers continue to bring houses to market, homes go down even further. That's not happening in this market. Therefore, there seems to be no evidence of any crash underway. One of the indicators of that is new listings are not coming to the market. Here's Realtor.com showing that new listings has continued all year long to be record lows of new listings. And in particular, it's even dropped off and dropped earlier than most years. So while even the pandemic years, this was a low inventory level, it's slowing down further, and that gap keeps widening on the all-time record of fewer listings. And it looks like we have a downturn now in terms of our numbers. So again, without new homes coming to the market, you can't have a housing crash. This indicates that we kind of have a floor as far as how low prices can go, and we're pretty much at that number now. In Los Angeles, the market is overall fairly healthy. Altos Research does a great job. They have a market action index, and they rank us at 44. They've been there for months. The key metrics are to notice that the per square foot, how much you get when you buy a house, has steadily increased all over a year and remained pretty steady. With prices decreasing, have gone up, meaning sellers are cutting prices a little bit to get homes sold, and there's a little more relisting, but overall inventory continues about the same record low, and of late has trended downward. So the market action overall in Los Angeles, 44, is what we would call a normal, healthy market. Take some perspective, a great post by one of the people I follow, Lance Lambert from Fortune Magazine. He overlaid the housing prices over the last 20 years. Now, if you track month to month in the news, you would think, wow, housing prices have skyrocketed up, they skyrocket down. But really, these are minute changes, and the news tries to exaggerate them to get a story. But when you lay out the changes over time, you can see that 2023 is kind of in the middle of the market for month-over-month housing price changes. It's not a record low, it's not a record high. It seems to be moving overall in alignment, and maybe a little higher slightly than the average years. It was a little lower at the beginning of the year, a little higher now, but in alignment. So I think from where we sit, if we stand back, it's pretty much a normal year in real estate. No crash, at least. Again, I'm not predicting the future. I'm just saying based on where we sit here today with the facts in front of us. One of the problems is the facts that consumers get is so poor. I'll give you an example. California Association of Realtors, I'm a member. It's a great organization. They do a lot of great things. What they don't do is educate the public very well. Here we are, as I'm recording this, July 16th. And the last statistics they're showing is May home sales. They published that on June 20th, about a month ago. So they're going to get the June numbers out here any day. But how can you not have the May home sales out June 1st or 2nd or 3rd? I mean, what's involved in accumulating the data? Isn't there a spreadsheet, a Google Doc, or an email that every association would send their information to in a hurry to get the newest report? It makes no sense to me. It makes no sense why it takes over 50 days to get the report out month to month. But here's a case where the people in the business, Redfin, Zillow, companies that do title work, they know the numbers. And so they can see a trend at least a month before the average consumer. This is where we as consumers are really not getting a fair shake and overall vulnerable, have to be very careful what we watch in the news. Now, if you follow me at all, you'll know that I take real estate industry news and point out the worst offenders. This week, the word goes to Fox Business News. Now, I will say that Fox Business News has some entertaining interviews, and I do like some of their news coverage. But in terms of reporting on the data, they do a terrible job on the real estate news. So, for example, you'll notice here we are back in September last year. They play part of the echo chamber. Redfin says something, and then they repeat it as though they're not responsible. So Redfin predicts sharpest turn in housing market since 2008 crash. That sounds to me like bad news. After years of record high sales, data shows the housing market is starting to cool down. Not just cool down, sharpest turn in the housing market. Now, if you're the editor at Fox Business News, you would say, well, I didn't say that. I'm quoting Redfin. But you did say this. And you just say the rest, and you put it in your article, in your website. Why would you put it there if you believe in it? So here's what they were predicting back in September: the sharpest turn in the housing market since the 2008 crash. So they continued in October. When is this? October 5th, I think. Yeah, October 5th. Housing market U.S. headed for major slowdown. Major slowdown. And they're saying that housing prices likely headed for sharp plunge. Not minor correction, sharp plunge. And what was the data they used? They quote Black Knight Data, who sells data to different real estate companies, right? And it had 2 straight months of reductions. And so then Fox Business News took 2 months data and on their own projected it forward as being a plunge. That was back in October. How'd that work out? Here we are now in February. They quote economists, they'll put his name in, who call the 2008 housing crash, predicts another 15% drop in housing prices. They're projecting a 15% drop. Now, the economists, they didn't bother putting his name there because nobody would recognize his name. And home prices have a way to go before they hit bottom, the economist argues. And they put the economist in here, and they finally do have his name. In recent notes, Ian Shepardson, I've never heard of him, chief economist at Pantheon at Macroeconomics, might be a great buy, but this one guy makes a prediction. There's a reason why he's not that well known is he has not been consistent over time. Maybe he made a great prediction in 2008. I don't know. Been wrong ever since. I have no idea. But here's what I can tell you. Prices since February are not on track to go down 15%. Just not. Bad prediction. Sorry, not sorry. So then... this is one that's even funnier. July 14th, so that would be Friday. U.S. home prices still face a steep and sustained decline this year, economists warn. So they quote an economist, again, not naming them there. Here's Pantheon economist Kieran and Clancy. Now, the last article was from, where was the name? I'm sorry. Ian Shepardson, the chief economist at Pantheon Macroeconomics, and now we have a guy at Pantheon, same company. This guy's just an economist. So are they on the same page? Again, Ian's prediction was back in February, and here we are now in October, going back to the same company but different economist, make his prediction. And what's he base the prediction on? He bases his prediction on the fact that mortgage rates are going to continue to increase above 7%. Well, did it happen? We know today not. But here's the funny part. Notice this article. This was July 14th. They're saying prices face a sustained drop. Yet just that earlier Monday, July 10th, home price growth dips. The growth dips to lowest levels. Single home growth could tick back up in 2024. So here they're talking about growth and more growth next year. And then 4 days later, they're quoting a guy, house going to face a steep decline this year. Which is it? Really? Come on. Come on, Fox News. Get your act together here. Really, that's just too funny. So at the end of the day, what are they doing? And I think it's pretty obvious. They're not in the business of educating you. They're in the business of getting your attention, getting you to click, getting you to go onto their website, read more information, subscribe to their material, maybe, and then click on their advertisers. They're selling your eyeballs. There's a saying on the internet that if you're not paying for the product, you are the product. And when you watch internet news today, your attention span is being sold by these companies without regard to the quality. They just want to keep you on the program. They're kind of like companies that put sugar in products to get you addicted to the product. They're not worried about your health. They're just selling a product. And so what should you do? Well, I think it's really important that you make decisions best based on your circumstances. If it's time to sell a house for you, sell. If you need to downsize or want to move, great market to do it. With the right strategy, you'll get a great outcome. And if you're looking to buy, maybe to buy a bigger house or a downsize or move in another area, with the right strategy, you could turn it to your advantage. So if I can help you in any way, reach out, call, text, email. My social media is down below. And as always, make today your best day.